right, let's move on. Corporate voices lined up on the show. It's been a mixed set of Q4 numbers for Birlasoft. Angan Guha is the MD and CEO here to discuss the quarterly performance and more. Thanks so much for taking time out to begin with, Mr. Guha. Your revenue has been a bit of a miss in the quarter gone by. Can you just tell us as to what really has led to that? And the question is, will there be a recovery in the coming quarters?
Yeah, hi. Thank you for having me on the show. So look, quarter four has been a little soft, as you have stated. We grew revenues 1.6% quarter on quarter. But you must look at it on the back of a very strong Q3. Q3, we delivered about 1.8% in a seasonally weak quarter. So all in all, for the year, I mean, we've grown our revenues 10% in dollar terms. We've grown in rupee terms 12.7%. So I think it's been a strong year overall.
In a weak quarter, you were growing, and in a strong quarter, growth was not there. Was there some client-specific issue which was there and which will be sorted out going forward?
So, Nikunj, there is no client-specific issue. I mean, the reason the 4Q was a little soft was because, our life sciences business, which is really seasonal, took a little bit of hit. But I'm not so worried about that because, typically like last quarter, we had an issue with the BFSI business due to furloughs. And this quarter, you've seen the BFSI business is back on track. So my sense is the life sciences business will have a little bit of seasonality for the next couple of quarters. But I'm sensing that life sciences business will also be back maybe by Q3. So overall, I'm not that worried because of the seasonality.
So tell me, going forward then, Angan, which vertical of yours you think is going to drive growth? Because like you also alluded to, healthcare has done better for you as opposed to your peers, but you have kind of sort of lagged. Just help us understand, what business is going to be the growth driver and engine going forward.
So, Aisha, look, from our perspective, I feel financial services will continue to drive growth. Manufacturing has done reasonably well, so that I also feel is sustainable. Life sciences, hopefully over the next 2 quarters with a little bit of softness by Q3, it should be back. So in my mind, all the four businesses that we are focusing on will continue to grow. Now, quarter on quarter, there may be a little bit of disruption here or there, but I think overall the story is really panning out well.
What about deal wins across categories and across segments? Because while they were steady this quarter, how's the pipeline now looking and what kind of orders are seeing more traction?
Yeah, so, deal wins, again, if you look at our overall year performance, we delivered about $875 million worth of TCV deals, right? Out of which, the new deals was almost about 100 million. Now, technically, year on year, this represents only a 1% growth. But if you look at our net new business out of the entire 875 million, pretty much 50% of that would be net new. So from that perspective, I'm not so unhappy. But sure, we could have done better. But our pipeline is now almost touching $2 billion. The issue is, with the uncertainty in the market, the decisions are getting pushed out. So we will see. Like I've always said, we'll take 1 quarter at a time, and we will see how it goes. But look, our commitment has always been that we will deliver industry-leading growth. We've demonstrated that over the last 6 quarters, and we will, try and execute on that going forward as well.
Most of the IT companies have gone easy on hiring, which could be a clear indication of where the attrition rate and where the entire employee cost is moving. Mr. Guha, do you see for Birlasoft, there could be a big reboot in the so-called employee cost, and that could aid margins going forward? Because unlike the sugar rush of 2021 and 2022, right now looks like it's a hot and a dry weather.
Yeah, so Nikunj, you can make an incredible point because look, I mean, at one end, our attrition is going down. I mean, you would have noticed our attrition is now at 12.4%. I feel for the next couple of quarters, attrition will be a range bound till the market turns back. And with the uncertainty, I don't think FY25 will be any different than FY24. And you've heard that from all the commentary in the industry. my sense is that, we will continue to do wage hikes. We are committed to our employees to continue to do wage hikes. We will do it this year as well. But the employee cost will be moderated. Now, as far as margins are concerned, I've stated that we will keep the margins at a narrow band because I'm still in an investment mode. For the next 2 years, 24 months, we will make a lot of investments in our people, in our domain, in our capability, and all of that. So I'm pretty happy with the current margin levels, which is about 16.5% EBITDA margins. If we can keep it within the narrow band and continue to invest in our business, I think we will build a long-term growth-oriented story, Nikunj.
When I look at your peers, all of them have proudly shared with us that look, our deal wins are at record high. And that is almost like a 6-7 quarter phenomenon where every quarter IT companies, they come out and they proudly share with us what is called as the order book booking. But that order book has frankly not translated into any revenue growth whatsoever. So if orders are strong, why is that not translating into revenue? Why is order book not getting booked in?
So look, Nikunj, I can't comment on other companies. I can tell you only my story, right? In our case, like I stated, order book has been muted, right? We did not have a record order book. I wish we did, but actually we didn't. But our revenues have still grown 9.5% dollar terms and almost 12% rupee terms. My sense is in our case, our funnel is strong. Our order booking will improve from FY24. FY25 will be a better year when it comes to order book. We are completely focused on that. We're creating pipeline. We are booking more orders. Now, as far as converting order book to revenue, it's a manifestation of two things. How do you convert the order book to revenue in terms of execution? And on the other side, how do you make sure that you don't have a leaky bucket? And we are focused on both ends of the spectrum, Nikunj. So I feel, reasonably okay that, we will continue to drive industry-leading growth.
I want to go back to the margin point. You've said that you are in the investment mode, but you will not be in investment mode forever. It could be a 2, 3, 4 quarter phenomenon. 14% operating profit margins, impressive. But what will make it incredible if you go closer to 17, 18% or even aim to go to 20? In the overall scheme of things, if Birlasoft has to share, let's say, a 2-year view or 3-year view, what are the chances that you would be closer to 20 rather than staying put in and around 13 to 15?
Yeah. So, Nikunj, look, I can't give a guidance that far out. I can only tell you that our investments is not going to be a 4-quarter phenomena. It'll be an 8-quarter phenomena. Because remember, Nikunj, we are building the business grounds up and we are building the business for the long term. And, there is a lot of investments going in AI. There is a lot of investments going in Project Optimus, which is our internal tech transformation, and that will cost a lot of money. But we will do all of that because eventually, when we build a strong base, margins will improve and revenue will only uptick. Clearly, once we become a bigger company, once we cross the $1 billion, margins will absolutely move up. So my strategy is clear. My strategy is that over the next 2 years, keep the margin at that 16.5% band in a narrow band. And once we have built a strong base, then start growing revenues significantly, which will automatically have an impact on margins.
But if I have to talk about FY25, can I say that unlike the mixed signals which we are getting from the industry, for Birlasoft, you expect 2025 will be better than 2024 and a lot of chaos which happened because of AI. Can I say that that is behind?
No. So, Nikunj, it's hard for me to say whether it'll be better or worse. It is incredibly hard. Look, I can only tell you that whatever is the industry average growth, we will attempt to do better than that. And for a company of our size, which is about $650 odd million, it is important to execute every quarter. So my focus and my team's focus will be clearly to execute for the quarter and take one quarter at a time and end up at wherever we end up. But, we will continue to invest, like I've said. We will keep the margins at a narrow band. We will build a lot of capability. We will win deals, build pipeline. All of that, we will absolutely do. Now, whether we grow at 5%, 10%, 15%, it's very, very hard to say. But we will take it one quarter at a time.
Right. Okay. Great chatting with you, Angan. Thanks for taking the time out and speaking with us today.
Thank you.
If you like this video, then like, share and subscribe to ET Now.